Good afternoon, everyone. We'll just wait a couple minutes while people come into the room. We have a lot of people signed up for our webinar today, 3 Ways to Build Wealth in 2021. I'm just going to have a quick peek and see who's here. And as you're entering, let us know where you're from, because we are a global community and we have people entering all across the globe. I see Alejandro in the room. We have Blaine, Carolina. We have Haley. Welcome, welcome. Lots of people are coming in, and I love to know where people are from. Blaine, you're from Toronto. Amazing. We're neighbors. It's fantastic. Haley's from Peterborough. Excellent. Keep writing it in the chat. I love to see where people are from. I think last Friday we had people from the UK, we had someone from Germany, we had people in Florida and Atlanta and all over. And for those of you who are here for the first time, welcome, special welcome. I know some names here I'm seeing first time names, and then other people have been here a few times from Vancouver. Alejandro, that's amazing. We have a great community in Vancouver. See Calgary. This is fantastic. Excellent. All right. Yes, it's so great to see so many new people from all across the globe. And we will be starting maybe in about 10 seconds. I know people will be coming into the room probably when we are beginning, so we don't want to miss too much, but we also want to award your punctuality as well. So thank you. Thank you. Hello, Tiro. Hi, everyone. This is fantastic. Well, thank you, everyone, so much for joining us, and welcome to our webinar, 3 Ways to Build Wealth in 2021. My name is Monica Jazik, and I am so excited to be with you today. And we're going to spend the next hour discussing 3 ways you could build wealth in 2021. And at the end of this webinar, I would love to open it up. This is a live webinar, so I'd love to be able to open it up for Q&A. And I'm going to ask for some interaction in the chat throughout the webinar as well, just to keep the energy levels up. I know we get a bit lethargic sitting down. We're all doing so well with this COVID-19. So feel free to write any comments and questions in the chat and the Q&A box. And then afterwards, when we finish the presentation, I am going to ask you to even come live. You can ask your questions live or type them live, and we can even spend some more time together on this wonderful Friday afternoon interacting. Okay, so I see quite a few new people in the room. And so I am going to give a quick introduction about myself. My name is Monica Jazik. I'm a real estate investment specialist and a wealth builder, and one of the leading authorities in real estate investing. And I share my methodologies on stages, podcasts, television, and radio, as well as authored a book, Real Estate Mistakes, Our Mistakes, Your Success. So I'm co-owner of Real Property Investments Education, which I started over 11 years ago alongside my wonderful husband, Vaughn. That's him in the picture here. And we help real people build real wealth through real estate and alternative investments. We're parents of 4 wonderful yet expensive children, and we live in Toronto, Ontario, where we spend the most of our time parenting, as well as living our best life. And we used to participate in lots of fun hobbies like tennis and CrossFit and skiing and a lot of travel. Obviously, that's all been compromised since COVID-19, but spent a lot of time home with the kids and walking the dog. But our biggest accomplishment really has been creating time, money, freedom in our lives. And that's what we help other people achieve. And we wouldn't have achieved this if it wasn't for what we're about to share with you today. So this is great and we love our lives and everything, but what we're really passionate about really is helping people. And I love this quote: we make a living by what we get, we make a life by what we give. So I'm going to just go through, as a wealth builder and a wealth expert, and we are a global community, I'm forever compiling statistics about what we as Canadians, Americans, Australians are currently dealing with. And it's amazing how similar these stats are when you review these in the developed countries. So we have 50% of Canadians, Americans, and Australians are all living paycheck to paycheck. 32% of Canadians, Americans between 45 and 64 are nearing retirement without any savings. The average university graduate finishes school with more than $26,000 in student debt. It takes them an average of 10 years to pay it off. And millions of millennials are locked out of home ownership because of the rising home prices, debt loads, and inability to save for a down payment. Now, this is really scary because these are not non-productive people. These are hardworking people who've done exactly what they were taught to do. They're taught to go to school, and then you're supposed to study hard, and you're going to get a good job, and you save for retirement. And the problem is that with today's cost of living, people cannot afford to save. And what they do save, they're not growing it the right way. So what most people do is they're going to work and they're trading their time for money, and they're getting a paycheck, and then they're paying their bills, leaving them with no money until they go back to work. And then the cycle continues. And when most of the time when they do invest, they invest in this, which is low growth products that they have really little or no control. And if you average out the returns, of mutual funds and stocks, if you're just kind of like Vaughn and I were, setting it and forgetting it, we weren't monitoring, we had no knowledge, we weren't working properly with an active advisor, you'll really find out that the average returns, if you average over a period of 5 years, because of the volatility, it's very difficult to really you can't do annualized returns. You really need to spread it out over a period of 5 years. You'll see that you're at about 5%. And this isn't awful until you minus the 2% management expense ratio fees, and then another 1.7% for inflation, leaving you with about 1.3% growth. So if you're saving your money in this way, you're not even keeping up with inflation, never mind building long-term wealth for savings goals. And I know this story way too well because we lived it for many, many years. I mean, we wanted to create wealth for my family. I have 4 kids, and I wanted to be a stay-at-home mom. My long-term goal was funding university education for 4 kids, as well as to grow a healthy retirement. And I was doing things the traditional way, and notice it was really not getting us any closer to our goals. But we thought we were doing things the right way. We were using a financial planner from the Investors Group, and we set up RESP statements for each of our kids. My husband was contributing to his company's group fund because of their match program, and we were diligently saving 10% every month to our RSP. So we set everything up. We thought we were doing the right thing because we liked our financial planner, and because we were given free money every month from my husband's employer, and also because this is the responsible thing to do. We just set it and forget it and trusted that the money would grow. And did it? Well, for a long time, I honestly was saying, I don't know. I don't know if anyone else here is in this position, has done all these steps, but we receive statements every quarter in the mail. We tried to make sense of them. I mean, they were beautiful graphs and illustrations, but what did it all mean? And even if I knew the returns, I could see the returns, but what was I really even investing in? I mean, what companies, who are the directors of these companies? What are the backgrounds? What are these funds' exit strategies? I mean, you work, you save, and you trust. So how many of you have actually done all this, but you actually monitor it with your friendly financial planner, and you review your returns quarterly or even annually? You discuss and you review and you modify your plan? Now, if you're doing this and you're getting the returns you want, that's absolutely amazing. Keep doing what you're doing. But that is not what we were doing. We were just confused with the results, and we really had no clue where we were going. And in 2008, when we finally opened our eyes and started paying attention, we realized our projected returns for retirement were going to be $40,000. And that we'd be lucky if we even had enough in our RESPs saved to send one kid to university. And this is really when that light bulb moment went off, saying we need to grow our money differently, and only you can do that. It's time to stop listening to traditional financial planning and start doing something different. We read a book, Rich Dad, Poor Dad, and that just changed our thinking towards building wealth and taught us how real estate could be a huge wealth builder. And using the equity from our home, we bought 3 properties, one for each child. We only had 3 kids at this time. Property number 1 is on the top left here, and that was a ski rental in Blue Mountain, Ontario. Property number 2 was a total flip property that we bought in Timmins, Ontario. Do not ever invest there, for $40,000. And property number 3 was a single family home in Porcupine, which is an even smaller town just outside of Timmins. And that was also $40,000. That's the one at the bottom. So I'm wondering here, let's do a little fun contest. Who would guess of these 3 properties, which one was the winner? Property number 1, property number 2, or property number 3? And you could write your guess in the chat. And I'm gonna have a quick peek in here. Oh, I see some guesses coming in. Oh, Tiro thinks the Blue Mountains. I mean, who would not love the Blue Mountains? Like, geez, any other guesses we have? I want some guesses. What do you guys think the winner would be? Property 1, 2, or 3? Oh, we have 1. Haley also thinks it's the Blue Mountains. No one has any faith. 2. We have 2. Blaine thinks it's 2. Take one more guess, and then we'll reveal these amazing results. And someone else is throwing in number 3 here as well. It's just to, maybe you're a fair person. So let me tell you how this turned out. Property number 1, the Blue Mountains, which we just thought was so great because we ski there and we'll use it, and we did pretty well. I mean, we bought it for a fair price. We fixed it up. We did all sorts of stuff to it, and but we didn't do anything the right way. You know, we bought it right, which was fine, but we fixed it up. We didn't know how to leverage or utilize credit. We used our own money. We did pretty good with the repairs. We also didn't know anything about mortgaging condos, never mind vacation rental condos. We didn't know about shoulder seasons. We didn't know about property management companies taking 50%. We didn't know about condo fees being more than the mortgage. And this was all new to us. And we also didn't know about the stress of, you know, money flying out the window when you are using it. You just are waiting to rent it out, because every time you do use it, you know, you are losing money. So this property number 1 actually ended up neutral. So we ended up selling it for 2 years later, pretty much for what we bought it for, because of all of those reasons above. Now, property number 2 was a real winner, but it also turned out to be a loser, and I'll tell you why. So this property was, we bought it right. We bought it right, that's for sure. And then we actually ended up rehabbing this whole entire little tiny property in for $12,000. But once again, we didn't know about how to use leverage. We didn't know about OPM. We used our own money, and we didn't refinance it right after. So once again, it was a big, huge capital outlay, but this little baby, we increased the value, even though we didn't know we were doing that. We just thought we were, you know, fixing it up just for to be able to rent out. And we did buy this for $40,000 and rent this out for actually $1,000 a month. But the other reason it's a loser is because although Timmins was a great area 11 years ago, you know, I made a mistake as a beginner investor to chase cheap homes. And cheaper is not better. I thought it had strong economic fundamentals to some sort of degree, but my main draw to this area was the cheapness of these properties. It was a lot cheaper than the Blue Mountain, and it wasn't a condo, it was freehold. So I thought I was really smart here, but this turned out to be you know, a loser because of the area. Now, the one below, property number 3, this one started out as a winner because we just bought it for $40,000 as is, didn't do anything to it, rented it out for $1,000 a month. And for years it was a winner, but then it turned into a loser for 2 reasons. Well, one, we learned all about the baseboard heating. Do not buy homes with baseboard heating. This little thing here, the heating costs the tenants the same as the rent, basically. So that was a huge problem. It also did a nosedive into the ground because it did not have a basement. Do not buy homes without basements. You need a home with a full basement. And it also was not only in Timmins, it was in a town outside of Timmins, so it's even further from a small town. And so that made it even less desirable. But you know what? We did well. We did well. But all these lessons came out over years and years and years of sort of having these properties. So we bought these 3 properties like straight out the gate. And shortly after, we realized that we needed help and guidance. So we invested over 6 figures in real estate courses. And we took a series of 3-day workshops, learning extremely advanced strategies for an enormous price tag. I don't know if any of you have ended up in these hotel rooms before. So you might want to raise your hand if this whole setting here looks a little bit familiar. And because we spent over $100,000 on our education, we were determined to put all of these techniques into practice, and we completed over 100 transactions in our first year of real estate. And we did way too much too soon, and we made $1 million in mistakes. So our $100,000 education and $1 million mistakes actually taught us what not to do. And for that, we're very grateful, because not only did we write a book about our real estate journey so others can avoid the mistakes we made, we also started a consulting company to show people like you how to build wealth the real way in real estate and alternative investments. And to date, we've helped thousands of people take control of their investments and find freedom in their lives. And this is all based on our own experiences and us investing our own money. So how do scientists find cures? Well, they test on lab rats. And what's the difference between this rat and this rat? How many of you feel like you are in this rat race every single day, doing the same thing over and over again? Plains raising his hand, trading time for money. Absolutely right. Let us be your lab rat. I mean, we've done this before. We've been here, we failed and succeeded. We've tested what is right. We've grown our own money in all these areas, these models and opportunities we promote. And this is what we want to be talking about today: 3 ways to build wealth in 2021. But I want to be 100% transparent with you that we are going to be presenting an offer in this presentation, followed by the live question and answer period. And I don't want to be like those people in the hotel room I don't save prices till the very end and then discount and discount. And we'll give you great offers, but we're not going to leave you through this whole presentation because I've been there way too many times, even till this day, learning from my favorite mentors. It drives me nuts when people do this. I want to give you the offer up front without even selling it to you, just so you know what it is, so you can actually focus on the presentation without waiting for that proverbial shoe to drop and think, God, what are they going to hook me up for? So I just wanted to show you, we are going to be outlining the different membership levels that we have available at Real Property Investments. We're going to be showing you a brand new offer, which is 6 weeks of transformational coaching. That's going to be for $5,000. There's only 5 spots available legitimately because there's only one of me, and I'm going to be doing the coaching, and it is a pretty intense process. And we're also going to be offering a free 30-day trial for those people who are new to the real property community, because I believe that some of you might be ready to take advantage of an offer, but others also maybe you need to get to know us a little more. We're going to have some cool bonuses, and I totally respect that, what people's comfort levels are. So let's get started about talking 3 ways to build wealth. The first wealth tip and ways that everyone should be building wealth to avoid being one of those statistics that we spoke about at the start of this presentation is to buy real estate. So why do I love real estate so much? I love the fact that you can use leverage to buy real estate. If you want to buy stocks and mutual funds, you have to pay whatever the value of that is. So if you want to buy $100,000 of stocks and mutual funds, you're going to have to spend $100,000. But in real estate, if you want to buy a $100,000 property, you can leverage and spend $20,000 by putting 20% down on this property and end up buying 5 homes. So have $500,000 worth of assets for that same $100,000. I love how real estate, you can have a lot of control. You can pick what you want to invest in. You can pick where you want to invest. You can pick your rents. You can pick your area. You can pick your exit strategy. You can pick everything and control this investment, and also have that ability to plan for things that might go wrong. Whereas with stock markets and the mutual funds, largely you're subject to change that you have no control over. And sometimes these changes are even manipulated, from a government level. And if everything just all of a sudden drops and crashes and you go away forever, in real estate, you could be subject to change too. But in reality, your house still exists, leaving me to the next point, which is real estate is tangible. You can touch it, feel it, and taste it. It actually exists. And whether it's a passive investment or an active investment, we're going to get into that a bit, you can actually see your investment opportunity rather than just it being a blip on the computer screen. And lastly, people will always need places to live. So although it's like Maslow's hierarchy of needs is shelter, and as long as people need a place to live, you're always going to have customers, which are your tenants. So at Real Property Investments, this is an example of just a few of our real estate investment models in Ontario. We have these models built out with our experts all across the globe. What we do is we take all that guesswork out of investing, and we show people where to invest, what type of property to invest in, what price to buy, how much to rent for, what your returns will be. And we have entire teams from real estate agents, mortgage agents, home inspectors, property managers, and many more to give you the support you need to make these investment properties turnkey, saving you time and money, and most of all, mistakes. So although we're going to go also throughout this presentation through some facts and myths about real estate investing as well. Although real estate is an amazing wealth builder, let's dispel some myths about real estate. So myth number 1 is buy, rent, hold real estate is a passive investment. So if you think you could just set it and forget it, No way. Sorry to tell you that. Buying real estate, especially if it's buy and rent hold real estate, is an active investment. It's not passive because you need to find a property, you have to rent it out, you manage it every month, you maintain your property, you have to monitor your returns, and you have to create an exit strategy. So unless you're in a joint venture arrangement, meaning you're only the equity partner, real estate is active. Now, the good news is we can help you turnkey these opportunities to make it a lot easier. And we have a full team of specialists, but you still need to be in charge. You have a sense of responsibility, which is fine with 1 or 2 or 3 investment properties. But this does lead us to our next myth, which is you need to buy 100 properties to be a real estate investor. This was the talk of the town in those fancy hotel rooms, people just moving through like robots. How many properties do you have? How many properties do you have? How many properties do you have? I think that question should be, maybe it should be sort of streamlined or put in the same category as how old are you? How much do you weigh? And who do you vote for? It's kind of private, but people, there's this underlying quest, and I was there too to get this 100 properties because that will make me a real estate investor. And this myth is totally false. Even if you have 1 investment property, you are still a real estate investor. And FYI, having 100 properties is like having 100 kids. It's work. It's a job. You need to take care of them. And it only takes 1 property to create a huge difference in your wealth plan, especially if you're looking to do this yourself and not create a new job for yourself. So I'm going to just show you a quick numbers example of the power of real estate. Now, if you were to buy a house for $375,000 and all you do is hold this property for 5 years, and we're going to do it at 5% appreciation, which is historical norms, the value of this property is going to be around $478,000 after 5 years. So if you were just to simply sell this property after all of your real estate charges and your deductions, you're going to get almost $104,000 for the sale. But remember, even with you renting it out for those 5 years, and if you're getting $2,400 cash flow a month, which is about $20,000 over the 5 years, when you add the cash flow plus the profit, your ROI is almost $125,000. This is 30% ROI. This is a very powerful investment. And all of our investment models, which do vary in prices, some are a lot higher, some could even be lower, they are all falling between the 25% to up to 48% ROI. And these are in different areas with high economic fundamentals across the globe. But the reason I'm telling you this is I want to show you how powerful 1 property can be. You could use this property to pay for a big ticket item in life, like helping your kids pay for their college tuition. By looking at these numbers here, pretend it costs $22,000 a year or $88,000. This is my number to send 4 kids to school. This just shows how 1 property is able to fund this expense. Or if you have another goal, like you're looking to retire, you could buy the same house for $375,000 at 40, and your mortgage will be paid off by the time you're 65. And with the house value increasing at 5% over 25 years, you're going to be at $1.27 million. By 2, you'll have like over $2.5 million. You can keep the cash flow to live off of. You can sell, you can live off the cash. And don't forget your personal residence. With these 3 properties, you could be a multi-millionaire. You can also pass these homes down to future generations. You can leave them in their will, and you can have them split the proceeds. You can also strategically refinance, and your kids can use these funds to become a homeowner. And all of this can be achieved even if it's just 1 property. Myth number 3 is buy, rent, hold properties are going to replace your income. Wow, I certainly thought that. That's why I wanted 100 properties. And that's what it would have taken, 100 properties to replace my income. Well, let me tell you, After having a lot of bad properties, and I've had well over 100 properties, this is not what investing in buy, rent, hold real estate is all about. And buy, rent, hold real estate is a long-term wealth play, and it will help with those big ticket items in life, like we spoke about: kids' education, retirement plan, leaving a legacy. Now, it normally takes 5 years to accumulate the gains from your property, and it definitely should be generating positive cash flow, but this is a bonus and it's not to be relied on. It takes time for appreciation, for mortgage paydown, and other factors in that 30% ROI to work their wealth building magic. So if you're looking to create monthly cash flow through fix and flipping or private lending or rent to own, we could totally help you. But this does not involve buying a buy, rent, hold investment property. And none of those strategies are going to give you that long-term wealth. They will give you short-term wealth. So it's really important to know what you're trying to achieve when you're investing so you can match the proper investment strategy to that. Myth number 4 is I have to grow my funds through traditional bank products. Many people do not know that you can self-direct your registered funds. You do not need to rely on a financial planner to grow your money for you. You can grow your cash, you can grow your tax-free savings accounts, your retirement accounts, your LIRAs, your education funds in private lending, in private market products. You could do arm's length mortgages and even invest them in real estate. You can be the one to vet investment opportunities and be involved in growing your portfolio and still have the safety and security of working with licensed professionals to guide you all along the way. And this leads us to wealth tip number 2, which is take control of your savings and your registered funds. So what I just described here are called real passive investments. These are the passive investments that will grow your long-term savings, but they can also put cash in your pocket every month. They can replace your job income, and they can give you the freedom in your life. And the reason why these are truly passive investments is the fact that you do not do any of the work. All you do is fund the investment. So unless you're simply writing a check, then you are not a passive investor. And the last way, the wealth tip that we have is to build a real education, a real property investments. We're committed to dispelling these myths. As for the last 11 years, we've worked through all these myths ourselves. And we achieved some pretty amazing things, including me being a stay-at-home mom for over 16 years, paying for university education for all 4 of our kids, creating a retirement savings plan that, yes, is a lot more than $40,000 like we were doing before, allowing Vaughn to leave his 6-figure job at the age of 40 on his 40th birthday, as well as creating a legacy for our children. And these are the kind of goals that we help our members work towards, and goals that we're going to kind of talk to you about today. And I want to really stress the fact that we're not just another real estate course or group or whatever. How are we different than all these other courses and groups out there? I mean, first of all, we're one of the most long-standing groups because we started doing this before everyone else was doing it. 11 years ago, there was us and there was RAIN. So this is legitimate wealth building. We're not about getting get-rich-quick schemes. We do not teach low money, no money down investing. You're not going to learn how to invest for zero down, buy properties for pennies on the dollar. You will need money if you do want to invest. We do not charge a huge price tag for a short-term course because we feel that too many courses charge huge tuitions with too much information and too little support for when it is time to implement. When we were in the field implementing all of our teachings and making those $1 million of mistakes, where was our mentor? We want you to spend your hard-earned money on real estate, not on expensive courses. And we want to give you the information and assistance in building your wealth plan with ongoing support. So that's one key difference of how we are different, is not only is it a lower cost, it is the ongoing support and mentorship. And, although we are lower cost, please do not work with us because of the lower cost, because we're not a discount brokerage and we do not pride ourselves on being an affordable service. We pride ourselves on number two, which really is this ongoing support. And we want to make it manageable for you to be able to commit to a long-term program because we know how expensive life is. So rather than cornering you in a hotel room for 3 days and filling your brains with NLP mechanisms to talk you into spending an exorbitant amount of money, I want to be real straight with you. Because most of these expensive trainings do not work because of this very reason, is that people are not aware of what they're signing up for. And they sign up for a dream, a promise of change, but when it comes time to implementing, it's just too much. It's too overwhelming. There's not enough time, money, or knowledge. And all the pieces in a puzzle are required to put a puzzle together. And all too often, the missing piece is you. You need to be aware of what you're signing up for on your wealth journey. Is your participation is mandatory. We can only work with people we could help, and we choose you as much as you choose us, because we pride ourselves not on sales, but on success. And if our consulting program is not successful, then we're not successful. So who can we help? You have to have money to invest, whether it's available and ready to go, or maybe it's an asset such as equity in your home, existing investments, registered funds. Often people are richer than they think. And once we have a look at their portfolio, we find a lot of hidden wealth that we're able to help them grow in ways they never considered or even knew possible. And if you don't have money to invest, you just need to be open to creating a long-term plan and be committed to taking regular steps to wealth building or buying power. We have helped people develop their real estate business, pay off debt, improve credit, create a successful savings plan, and then they have funds to invest. And they've been really, really successful. But they're the exception, not the norm. Most people do have the money to invest, and that is the exception to the norm as well. But if you don't be embarrassed or ashamed or say, oh, I just guess I'm stuck to live in my box. There are options, and we can help you guide through those options, but you have to be realistic. If any of you out there are struggling, you just don't have enough money, that's the problem we got to solve, you guys. We got to look it straight in the face and say, how can I make more money? How can I fill in these blanks and really start solving this problem? And that's what we're here to help you with. Number two is you have to want to build wealth. You have to want to move forward and be willing to dedicate time, at least a couple of hours a month, to your wealth. Everyone wants to be wealthy, but no one wants to put in the time. That's like wanting to be fit and not wanting to work out. There's not a secret sauce or recipe. And our members do this with the coaching services, whether it is the personal group coaching or just group coaching, or even coming in on E&E memberships and just committing to watching videos and coming to events every month and jumping on masterminds, using the tools in our website, watching online recordings from the past. These are ways that they can work on their mindset. They can stay current, and you guys can build your network. Your network is your net worth. And we have these monthly events, and hopefully we're going to be meeting in person soon. I cannot wait for that. And we'll continue stuff online with our international speakers. Not only are we going to be able, before we were just meeting in person, then we're just meeting online. We can't wait for Real Property Investments to be able to offer you access to a global community, international network, but also a place that you can go in person as well and participate in events there, meet with experts in your local community, as well as make some new friends. But in the meantime, and if you ever can't make it, we have a members only site, which is all online. So you're able to watch all events from the comfort of your own home, as well as past recorded events on your own timing. And the last thing, guys, is you need to be open to change. I mean, one of our icons, Tony Robbins, says growth happens with 2 millimeter changes. And we'll work with you to create your personalized wealth blueprint. And that will consist of your action plan along real steps for you to move forward to build wealth. But we need you to be open and to work with us, not against us. If you're insistent on doing things your own way, even if it's not working, then you probably should go on your own. And we do not expect anyone to follow us blindly. We just ask if you're open to the possibility of change. That's where the growth happens. And we can't waste time talking people into things and convincing you that we're right. We're never going to sell anything to you. We're only here to educate you, to empower you, to inform you about opportunities that could help you grow. You need to decide to make that change. So we created those different levels of consulting to help people grow. And before I go in the Q&A, I'm just going to quickly run through these levels for the people who are brand new to real property investments. So you can see we have 3 different levels of membership. This is all available on our website with prices and everything, because we want to disclose everything. And these range from more personalized services to DIY services, but every single membership program, you have access to a private Facebook page to network with other members and post questions. You have access to a library of real estate training webinars and videos on our members site. You have complimentary entry to all events that are usually valued at $20. We have over 5 events a month. And you also have access to our real estate dream team and our sponsors section and discounts to our store. Also on our member site, we also have a lot of online tools that you could use to analyze your deals and really get started in, learning those numbers and figuring out everything you need to get started with investing in real estate.